Hey guys, what's up? Alec back with the daily stock market, and today what we're going to be talking about is stocks I'm buying during the dip and the best stocks to be watching during the dip. A lot of you guys are concerned with a dip, whether it's one thing or another that's causing it. You guys definitely want to be prepared. So let's go over about 5 different stocks and maybe we'll talk about some bonus ones. So let's talk about 5 different stocks and make sure you stay to the end because we might be talking about some bonus ones. Also, smash a like on the video if you've been enjoying these videos. Huge growth stocks like the ones that we're going to be going over on the list today have absolutely been getting destroyed. So I don't think that growth stocks are going to dip much harder when you guys are concerned about a dip. You should be probably more worried about big tech, I think, is going to be selling off soon because right now it's riding up so much hype. All these big tech companies that are reporting killer earnings, and that's a good thing if those ones dip because those are the ones you want to be in long term anyway, and you would be able to buy them at a better price. You also want to develop more of a long term mindset, so when you see a dip coming, that's a good thing. That's why you see I have buying power of $18,000 is because I'm prepared. I'm not tapping myself out and putting every dollar I have in the stock market. I have even more in savings account. You should have about 3 to 6 months in savings of expenses, monthly expenses. So with that being said, dips are good. Get the long-term mindset. Buy the dip. That's one of my biggest secrets of making money in the stock market. And with that being said, let's get right into the video. So the first one we're talking about today is Twitter, TWTR, down 13%, guys. $56 a share right now it's trading at, which is a pretty good deal if you're going to be holding for long term. If you're a short-term trader, you might want to see if it can go as low as about $45 or even $50 a share. But if you're a long-term investor, now's a great time to start a position, and dollar cost average, the lower it goes. I bought 4.3 shares. And you'll actually see right here, Twitter shares were slammed Friday after a social media company issued second quarter sale guidance with a midpoint below analyst estimates. And they were supposed to hit about 1.06 billion in the second quarter, and they're going to projecting 980 million. So they're going to be a little bit short on revenue in second quarter too. Twitter daily chart analysis. Here you can see the resistance where the 2 arrows are pointing, and then you can see it's becoming the support. So that resistance right at about $55, $56 is, my opinion, a good place to buy Twitter because that is the current support, in my opinion. And the next one on the list is ticker symbol PINS, Pinterest, a killer stock, a really great stock, down 11% in the week. And from all-time highs, it's down about 22%. Guys, maybe even a little bit more from all-time highs, more like 25%. Okay, so with that being said, you can see where the resistance and the support is at, right? So the resistance right about $65 a share. So in my opinion, between $55 and $65 a share, I want to be loading up on Pinterest for. This can also be a potential swing trade, because you can see the sharp downward movements. It's going towards the support here. So you want to buy as close to the support, $55 to $65, and then ride that up all the way to about $85 a share. So here you'll actually see I have about $350 worth of pins right now at an average cost of $66 a share. And if you guys are a part of my close friends list, you'll actually be notified as soon as I make purchases. So here you'll actually see bought 2 shares of pins for a longer term swing trade, wanting to buy most of my position in pins between $55 and $65 a share. And I keep you guys updated all day long on the close friends list. So if you need more direction, like for example, this one, buying 10 shares of BNGO and price alerts and buy signals with notifications on, make sure you DM me on Instagram because we are filling up very quickly and we have a few more spots available for the close friends list. Stocks down over 14% as Q1 results. We already know we believe that such a decline is an overreaction in the market as PINS has more than enough catalysts that will help create a shareholder value in the long term. So this is also a great long-term stock, guys. If you plan on holding for 3 months, 6 months, or 12 months, this should definitely be on your list. We continue to hold our long-term positions in the company, have no plans on unwinding anytime soon. Next one we have up is Piton Peloton, and it's down 4% in the last week, 5% in the last month, and 32% in the last 3 months, and 40% from its all-time high, guys. So in my opinion, I'm going to probably be buying this stock around $85, but I think it's a fair price, anywhere from $85 to $100 a share if you plan on holding for long term. Now, the PE ratio, it's sky high. So from a value standpoint, it's not the best in the world. Their market cap is a $28 billion company. So they're not a small company. They're one of the biggest when it comes to in-home fitness. Peloton stock price is down almost 40% from recent highs. Although every accident is tragic on a personal level, I don't see this being a problem for long term. Independent surveys of consumer trends show that home fitness is here to stay, and a huge majority of younger consumers prefer it above the gym, which is very true. And remember, with the whole pandemic and shutdown, that's when Piton really made a name for itself and became that $20-30 billion business that it is today. So people are thinking, was that just a once in a lifetime chance with the whole quarantine? Everyone was locked at home, or is it here to stay? And I actually believe it is here to stay. A lot of people I know like to work out at home, but like this article says, a lot of the older people I know still like to go to the gym. I think that this one can get to new all-time highs, but this one is a little bit more riskier for a long-term hold. So if you buy around $85 or $100, personally, I would want to be selling around $185 to $200 or new all-time highs. So the next one on the list is BLNK, and it's down 3% on the day, 3% on the week, 7% gain in the month, and still down 31% in the last 3 months. Now, just to be clear, guys, I like ChargePoint. ChargePoint is my favorite. If I had to pick BLNK versus ChargePoint, I would pick ChargePoint any single day of the week. If I had $1,000, I would probably put $900 in ChargePoint and only $100 in BLNK. But for the people that like BLNK, that's why I add it to the list, because we talk about ChargePoint a lot on the channel, and we'll continue to talk about ChargePoint a lot in the future because I really believe in their business model, especially with the infrastructure plan coming along. And GM, actually, there was some new news. GM is actually going to be partnering up with ChargePoint to become one of the leaders in EV network and EV charging. So make sure you watch out for ChargePoint. With that being said, BLNK is still a good second option. There's also another one that I'm looking into. It's called like EV Go. I think it's ticker symbol like CLII or something like that. But we'll talk about that in a future video. This one's going to be about BLNK for now because I know people are invested. If you are invested, I would not sell out and go into ChargePoint. I would at least wait for a gain and some profits to be had. For example, you can see I have a small position. I have 10 shares. We're up 6%, so it's still a great stock. I think that this one can get up to $50 again, but ChargePoint, I believe more in the long term. So this article actually says Blnk operates over 23,000 charging stations across North America, Europe, Middle East. The EV charging boom has caused Blnk stock to trade at an incredibly high PS ratio, and shares have grossly overvalued. Blnk has a bright future, but investors should approach with caution and wait for a cheaper stock price before entering a long-term position. So if you are in it for a long term, you might as well just wait for it to get a better price. I think it's actually at a good price right now. I would say at the price it's at, anywhere from $25 to like $35, I think it's actually a pretty fair value when you're looking at the long term. But again, I would just prefer ChargePoint, and we're going to be talking about ChargePoint more in the future videos, so make sure you watch out for that one. And the fifth one to buy during the dip is going to be GNOG, Golden Nugget Online Gaming, down 1% today and up 15% in the month. But guys, from their all-time high, it's been a spill to say the least, down 40-some%. So it's definitely dipping. It's a high growth stock that is dipping right now. I own $674 and will continue to expand my position. Anything under $15 a share for long term. I think it's very possible for them to go down to $11 to $13 again. So anything $10 to $15 a share is a steal for long term in my position. And I'll probably be holding this one above 30 because I think it can get to $20 to $30 a share in 1 to 2 years. So a little bit about GNOG management. Bumped up 2021 revenue guidance, indicating their strategy is being executed flawlessly is always a good thing to hear. GNOG will launch iGaming in 4 more states. They're only in 1 right now, so 4 more states in 2021 where we expect they will continue to gain market share over time. I think they're actually predicted to go to 11 states in 2022. We believe GNOG is gaining market in shares in Michigan, and we expect further share gains move in further states. Also, 13% increase in 2021 revenue guidance, highlight further upside potential, reiterate buy rating, and $24 target price. So this analyst actually has a target price of saying buy now, get into GNOG now because it is going to $24 a share. Also have some highlights. We won't go over all of them, so feel free if you want to go over all of them, pause it and read them yourself. Revenue of $23 million, which was in line with pre-announced offerings. And there's just a lot of growing basically by the end of 2021. GNOG expects to offer online wagering in 6 states: New York, Michigan, West Virginia, Illinois, and Pennsylvania. GNOG already announced that it is in Michigan and lower. These are the risks, the 2021 risks. Lower than expected market shares in newly launched states, which probably won't happen. They're going to have high market shares in those states. Delays in expansion into new markets, primarily West Virginia, Illinois, and Pennsylvania. So they are projected to go to 6 states, but if they have any hiccups along the way or road bumps and they don't get in those 6 states, that is definitely a risk for sure. So feel free to pause this and read through some of it yourself, but we're going to move on to the next stock. And if you guys want to stick around for the bonus stock, today it's going to be NIO. And the reason why NIO is the bonus stock today is because I wanted to add them to the list, but we talk about them in almost every single video that I don't want you guys to get sick of it. With that being said, though, a lot of people still want me to request NIO stock every single day for me to talk about. And in my opinion, you can write it down. Anything under $40 a share is going to be amazing for long term. I was telling you guys like $35 a share when it got that low. I have an average cost of $41 a share. But at this point, anything between $30 to $40 a share, try to snatch it up now because this is going to be a beast company. I don't know if you guys saw their earnings and everything they're projected to do in the future also, but they're growing by huge numbers right now. And remember, they're still a new company. So here you'll actually see a revenue swell of 529% to $1.2 billion in revenue. And then in the next paragraph, in Q1, NIO sold 20,000 premium electric SUVs, up 423% year over year. While growth is strong, NIO sees Q2 production barely inching higher from Q1. On April 7th, over 100,000 production vehicles were rolled off the line. It took NIO 26 months to roll off the first 50,000 vehicles, but only 9 months for the second 50,000. So that's very, very important because they're becoming more efficient. I was also reading an article that said they're only going to get better and better. So instead of 9 months, the 50,000 is going to take 4 months. And instead of 4 months, that 50,000 is only going to take 2 months. So they'll be able to produce a lot more very quickly, especially if you're looking in the future. So you really have to look in the future further than 2021. You have to look into 2022 and 2023 with NIO because they're only going to be getting better and they're only going to keep improving their production and their profitability. Here you'll actually see their gross margins, an average vehicle. Typically, other vehicles, it says gross margin reached 21%, while the margin increased to 19% in the fourth quarter. On top of positive operation cash flow for the full year of 2020, we have continued to realize positive cash flow from operation activities. They're also becoming closer and closer to profitability. Now, you can pause some of this stuff and read through it if you want to read through some of this stuff, but this is talking about their power swap station, how they're going to be able to do twice as many power swaps, which is going to be a huge game changer for NIO compared to Tesla. NIO has created innovative battery subscription model base, which is really going to be huge at the subscription model base. Instead of waiting to charge your battery for 30 minutes or an hour, NIO is like a gas station. You pull up, they swap your battery out in under 5 minutes, and you have a full charge and a new battery. So I hope you guys really did enjoy that video. Comment below what stocks you want me to talk about or what stocks I missed out on. I'll definitely put skills in the next video. I almost threw them as the bonus stock, but I wanted to talk about NIO because everybody loves them. If your account is looking a little bit negative right now, and it's not looking quite like mine, go ahead and reach out to me on Instagram. I have a great program, especially for beginners. If you're newer to the stock market and you need somebody to be a second voice or a second pair of eyes, and you don't have anyone to bounce your ideas off of, that's what I'm here for. I have the close friends list so you can actually see exactly when I'm buying a stock, when I'm selling a stock, what stocks I'm buying and how much. And then also that one-on-one coaching program if you need to bounce your ideas off of me or if you want me to look over any stocks for you too. So if you found value in this video, smash the thumbs up, hit the like button, comment below what stocks you want me to talk about next, share this video with a friend. And remember, start developing that longer term mindset. If you see red or you start seeing dips in the market, that's a good thing. You want to buy into the dip, lean into the dip because it will benefit you long term. All right, guys, I'll see you in the next video. Remember, don't time the market, buy the market. Peace.